Great. That's a good question. So the question is, what companies have you backed that you've really enjoyed getting behind? And maybe a bit of why you've enjoyed getting behind that company.
Well, a couple of them ended up being investees of Andrew's, and they were great successes. I don't think we can take a whole lot of credit for it, but they were fun to work with. One is Soko. What would you call them? They're probably not a jewelry maker, but they organize jewelry makers in order to deliver on consignments to large customers in Europe and North America. So your Nordstrom and your Macy's, I think, Anthropologie. So they essentially take big orders from some of these retail chains in the West and have created an entire network below them of jewelry makers who then deliver to them and kind of create an infrastructure around that. That was great fun. I'm happy they ended up where they are now, because when they were in our program, they were essentially trying to be an Etsy for these jewelry makers. And what, for those of you who don't know what Etsy is, it's kind of more of a website for individuals who can kind of post their products. And they wanted to create that as an infrastructure. And what we kept telling them is, I think you need to also consider actually taking on orders and letting that infrastructure kind of feed back down into your value chain in the upstream. And I'm happy to see that they ended up not taking our advice, but listening to someone else who said the same thing. And that's often what happens with accelerators. They say one thing and the entrepreneurs never listen, but then someone else says it and then they take that advice. But no, they worked also because they were a great team. The three co-founders, all female, were great fun, were really open, as much as they were themselves extremely well educated. Ella, who was kind of the CEO for a very long time, was educated at MIT, and she still was willing to kind of listen to our advice and have a sparring session with us. I think another one that really still is exciting us is ecofuels. Ecofuels, they take the knot of an indigenous tree called the croton tree. It's indigenous to East Africa, and I think there are also a fair population of croton trees in Ethiopia. And initially, they just took the knots and distilled the oil and sold that as biodiesel. But the founder really was on a mission to find out how can we use the various components of this. So once you've pressed the oil out of the knot, there is the cake left, but there's also the husk around the knot itself. And finding uses for these things has led them on a path of coming up with new things all the time. So instead of actually selling it as biodiesel, they're today selling it because of some unique properties that oil has in the paints industry, in the leather tanning industry, and they've just now found an application for cosmetics, and are looking into medicine as well. There might actually be some active components of the oil that is useful in cancer treatment. So instead of selling the oil at $1 per liter, which would just make them break even, they're now selling it at $3, $10, and $25, and they might even get to $100 per liter. And you can imagine if they're breaking even at $100, what selling the oil at $1 and what selling it at $100 would do to that business model. It would all of a sudden become a lot more attractive. And I'm happy to say we took shares in that against what we helped them with. So I'm hoping that one day we won't have to ask funders for any money any longer in order to pay for our program. That would be good.
Amazing.
I think those are some examples.
Brilliant. And
Okay, I'll just say that I love working with management teams that communicate with me, for the reasons that I was discussing earlier, who are really quick to address problems, who are prepared to listen, one of the things that John said, who are really smart, because that's just an exciting journey. They innovate fast, they problem solve, they wake up in the morning, they've been thinking on it all night, they come up with ideas and they talk to you about it. So I love entrepreneurs who, when they hit problems, because they do, just spill out in sharing that. And then particularly when they're good at using their team, they get the intelligence from the crowd, okay? It's not all in, nobody has a monopoly on wisdom. So the people who are lovely to work with are people who just poll the market, who talk to their colleagues, who talk to anyone else, who are not shy, who are so passionate about what they do, they'll communicate with anyone to find an answer, adapt, and then they're back on the road doing great things again. There'll be another roadblock further down the track, but that's fine. They've solved that one. So that process of iteration and pivoting and communication and bringing in intelligence, as John was saying, hiring great people. A really good sign of an entrepreneur is if they can hire great people. They're not afraid to hire people who are smarter than them. So because they recognize that the vision is more important than their own ego. Women are great because they don't have such big egos. Well done, girls. We love that. Blokes often have more of a problem getting over this, but women don't. And that's a good example in SoCo. So just really absorb that kind of vulnerability point that John was making earlier, because that's actually a real strength.
Great. So the question is around, within the Ethiopian business ecosystem, there's a high level of secrecy around one's business. And for some of you, you may know it might be out of fear of plagiarism. If you share an idea, next week that same idea is created across the street from you. And so there are reasons for it, but what's the advice for these guys around that? What do you suggest? What do you say?
What we try to facilitate is real dialogue between our entrepreneurs, because so often the problems they're facing has probably been faced by another entrepreneur down the track. So we organize meetings where we just get the entrepreneurs to speak to one another. Another thing we do as a policy, as an investor, is that we, in order to encourage that, we generally do not invest in a business which is competitive to something else already in our portfolio. So because we don't want to break trust with our entrepreneurs by making them feel a little bit exposed whenever they speak to us. So in order to keep that channel of communication open, we honor that by, if we've invested in a solar business, we won't go and invest in another solar business. Even if it claims it's targeting a different part of the market, in reality, entrepreneurs are nervous about that. So we try and respect that as investors, but equally we try and encourage them to talk to one another. Because like I said earlier, the wisdom is out there. It's in the crowd. You've just got to go and dig for it.
I think the only thing that I can add is that, saying this a little bit in a squared way, but ideas are worth nothing, actions is worth everything. If you're not acting on that idea, then maybe you aren't the one who should actually implement that idea. And what I really mean by that is often you just have to implement, and you have to implement it with speed. Otherwise, nothing is going to happen anyway. If you're not implementing it with speed, at some point someone is going to overtake you anyway. And you can try and protect yourself through IP and all of these things, but quite frankly, in an African context, I don't think that really matters too much. I think it's more the speed with which you actually get on with it and kind of start implementing. I think that's much more valuable.
Amazing. If you're on social media, that's incredibly tweetable. Ideas are worth nothing. It's all about action. That's brilliant. Excellent. So Tamrat usually poses 18 questions to our entrepreneurs usually, so it's good to just have 2 disguised as 1. So the first question is a real one. What does exiting look like in this market? And then the second question is, when you go into business, if you're an entrepreneur, what should you be expected to give up from an equity perspective?
That's the 2 really good questions. And Ethiopia is hard from a foreign currency point of view. We're delighted to see that things are getting a little bit better right now, and we hope that continues. And in all fairness, we have chosen in Greenpath and investing in a business which earns hard currency as part of its business model, because that eases the problem of accessing foreign currency. So we've been a little bit deliberate in choosing a business which generates a lot of foreign currency, because it slightly solves that problem. So I think until it gets a little easier in Ethiopia to get access to foreign currency, that will remain a concern for investors. So if I was speaking to the government right now, I'd say, you need to help on that, because otherwise investors just will not come in. If they can't see their way out, they won't come in. So but in terms of getting exits, one of the things that we believe is that over the coming years, Ethiopia will become an immensely attractive market for many businesses. So if we can build rock star businesses in Ethiopia, somebody out there is going to want them, especially if they've got a strategic footprint in a strategic market which is growing at 100 miles an hour. So I think that's our basic strategy. We think that there's enough value in this market that if you get a strong position in it, you will find buyers. The question is, how do you sell to them? So we've had to think a lot about how we structure our investment, because the Ethiopian regulatory framework doesn't actually make it that easy. So we tend to have a holding company offshore which has a subsidiary here in Kenya, because it's in the offshore environment. It's not a tax-free environment. It is an environment where the rule of law is more friendly towards investors. So you can have some of the rules about how you run the investment more easily incorporated. What's the percentage holding? Do you know what? We actually don't care. Don't tell anyone. We really don't care. What we care about, though, is that whatever we put in grows in value. And the other thing that we really care about is that the entrepreneurs that we back also get to share a fair amount of that value. There's no point us taking 90% of your business and going, yay, we got 90% of your business, because you'll lose your motivation and then we've lost our value. Absolutely no success there. We've all failed. So what we look for when we make an investment is a fair distribution of risks and rewards that everybody feels is about right. So when somebody comes to me with a piece of paper or a spreadsheet saying this is a scientific valuation of my company, I say, I don't care. All I care about is that the partnership between me and the entrepreneurs is felt to be fair and a fair distribution. So while I think Novastar takes a slightly unusual view about that, because who knows, at a startup, it's either going to be worth $100 million or nothing. So what's the point in arguing over, I want 20% or 21% or 19.5%? It's a waste of time, because it's either going to be worth a lot or not very much. So we tend not to spend a lot of time in the early days worrying about what's the right mathematical formula for how much we own. We just want the entrepreneur to feel that it was fair for them and for us to feel it was fair for us. As the business grows and gets more established, you can use more common metrics to start valuing a business, which are referencing other similar businesses, so that you can get a sense of what's the right valuation. But in those really early days, it's just too hard. We don't bother trying.